Girish Pai joins us, and Girish Pai, do you track power sector? I know we will discuss IT, but I'm just tempted to ask you, 3 years loan book doubling. If you don't track, maybe that conversation could prompt you to start tracking it, my friend.
No, we don't track the space or power sector.
Fair point. We'll give it a skip. Let's look at IT. The general view with IT has been that the dollar interplay, which aided to the margins, that's behind us. The AI adjustment is not over yet, and growth will still remain tepid for FY26 and beyond. Is that a reasonable assumption for the IT sector?
I would say so. I think on the growth front, I would agree with the tepid commentary that you talked about. So let's tackle this one by one. So the INR dollar, so INR is depreciated quite a bit, and the expectation is that is going to help margins. Now, Nikunj, I've been tracking the sector for almost 25 plus years. And when I started tracking the sector, INR dollar was about 42. And the EBIT margins were close to like 35% for Infosys. Today, INR dollar is about 87, and we are at EBIT margins of 21%. So it is not that INR depreciation vis-a-vis the dollar is going to automatically lead to margin expansion. So a lot of this is kind of given back to customers, is one of the points I want to make. And obviously the costs are been increasing and pricing has not been improving. The second point on AI, I don't think it is still a reasonably large component of the business as we speak. That's why we don't see any kind of metrics being put out by the companies. Yeah, there is a fair bit of AI infusion in almost all projects that these companies are delivering to customers now. But on a standalone basis, I don't think there's anything that's very material to talk about. On the tepid growth part, I just want to step back and look at the picture from a slightly longer-term perspective. So if you look at the second half 2024, Nifty IT delivered a 22 percentage points outperformance versus Nifty, despite earnings for FY25 and 26 being broadly constant during those 6 months time frame of consensus EPS here. That was because I was expecting that FY26 is going to be a very strong growth year. So if you look at FY24 and 25, industry grew by 2% or will probably grow by about 4.5% in FY25. And the consensus was expecting that growth would go to 7 to 8% in FY26. Now with what's happening in the US, tariffs, tolls, that, my sense is that FY26 is not going to be a better year than FY25. It's going to be at best a similar year from a growth standpoint. Now we need to wait and watch whether it is going to be a lower year, whether there's going to be a growth weaker than FY25. That's going to be dependent on few factors which are ahead of us. This whole reciprocal tariff situation, and the other major thing is fiscal tightening in the US. I think that could be significant in the next 7 months. Those are two things to watch out for. And I think that those will determine whether we're going to see a weaker year than the market is kind of pricing in maybe a similar year compared to FY25 as we speak. So we're going to see a tepid year both in FY26, and I think a big one is FY27. Even I'm betting that it's going to be a stronger year in FY27. Now we need to kind of wait and watch how that kind of plays out.
Right. Good morning, Mr. Pai. The shareholders are joining in the conversation. There are a lot of talks actually right now surfacing, given the fact how the US economy will be functioning on back of tariffs, the fact that we are hearing the big R word, recession, also actually creeping in some of these brokerage reports also globally. In light of that, what does it mean for the Indian IT companies? How is what's the scope of them actually performing going ahead? Because given the fact that valuations for most of these IT companies is much higher than last time we actually saw a recession.
Right. So if you look at valuations, I think, so this Nifty IT, just as I mentioned, it was higher. It outperformed Nifty by 22 percentage points in the second half of 2024. Year to date, calendar year, thus far, it's underperformed Nifty by about 12 percentage points, kind of factoring in some of these issues that we'll probably see slower growth. Now, the thing here is that, will we see, the recession word, I don't want to talk about it right now. My sense is that even my numbers, which are basically lower than consensus, basically assuming the growth in FY26 is going to be similar to that FY25, is not factoring in the recession. I think the growth is going to be slower in real GDP terms. US delivered 2.8% growth last year, 2024. I'm expecting that maybe to be in the 1 to 1.5% territory in 2025. Should it come lower than that, I that FY26 growth could be much lower than what I'm anticipating at this point in time. So could there be further correction? I think it is dependent on how this reciprocal tariff situation plays out. And more importantly, the fiscal tightening that's ahead of us, I don't think too many people are talking about it. So if you look at the last 5 months of this fiscal, and their fiscal runs from October to September, till February, the run rate from a fiscal deficit standpoint was 8.5% to 9%. And they're expecting a 6.3, 6.4% kind of fiscal deficit for FY25, which means there is significant fiscal tightening ahead of us in the next 7 months. So I don't know how things are going to play out from a growth standpoint in the US because of all these things, uncertainty around tariffs, fiscal tightening that's ahead of us. So I think the issue is also about FY27, as I mentioned.
Yes.
That is going to be a significantly growth year.
Okay. Girish, great to have you on the show. Thank you so much for your time today. That's the day coming in.
If you like this video, then like, share and subscribe to ET Now.